All right. Another question with respect to tax planning. Question requirement is to outline the tax implications. This verb is what important for us. Outline, determine, explain. All these verbs are very important from exam point of view. Outline means we have our answering must be in theoretical aspect, right? Although we shall be performing some calculation, but the answer is to be written in a theoretical manner. Outline the tax implication of each of the investment alternatives. A person would be investing an amount in different areas, and examiner is asking us to outline the tax implication of each of the investment alternatives. T has recently inherited the residue of his aunt estate. He will use the inheritance for the following purposes. There are multiple purposes. For example, there is alternative 1, there is alternative 2, and there is also an alternative 3. And with respect to these 3 alternatives, examiner has asked us to outline the tax implication of each of the investment alternatives. Let's talk about number 1. Personal pension contribution. Personal pension contribution. Keep remember, for taxation purposes, we require the gross amount, right? And furthermore, personal pension contribution and the gift donation, both these things are used in the tapering of personal loss concept. While calculating the adjusted net income, we deduct personal pension and gift rate from the net income to find the ANI. Then the same ANI is used in the tapering of personal loss concept plus the same adjusted net income wherein we have deducted the personal pension contribution. The same amount is also used in a concept named as child benefit when the person's ANI is less than 60, when the person's ANI is more than 80,000. So for calculating the same ANI is used in the concept of child benefit. 2 other things are yet to discuss with respect to personal pension contribution. I'm just quickly recalling the relevant areas wherein we do use the personal pension contribution. If a person makes a personal pension contribution or a gifted donation, so the basic rate band and the high rate band, both the limits are extended by the gross amount of PPC or GAD. And lastly, there are 2 tax benefits for such contribution. Number 1, the band limits will be extended. So we shall be paying tax to an extended band limit. Resultingly, the tax liability will go down. Plus, the same things are used in the calculation of ANI, and personal loss could be saved. So these 2 are the benefits for making the pension contribution. Okay, now back to the concept, back to the scenario. Alternative 1 is, please mute yourselves. Please mute yourselves. Thank you. T will make the maximum possible amount of additional, this word is important for us. T will make the maximum possible amount of additional tax relievable personal pension scheme contribution for this tax year 24-25. This word is suggesting us that the person has already made some contribution in personal pension fund. He would be making the additional personal pension contribution. So what will happen? So what will be the tax implication for this alternative? Having already made contributions of 10,000 during this tax year, okay, he would be making additional contribution, although he has already made a contribution of 10,000 pounds in the tax year 24-25. His adjusted income for this tax year will not be exceeding threshold limit of 260,000. Remember, when the adjusted income of a person is more than 260,000, then current year allowance, which is 60,000, that will be prorated, that will be reduced, that will be tapered. But for as it is clearly mentioned in question that the person ANI will not be exceeding 260,000. So current year annual allowance limit for pension contribution, which is 260,000, which is 60,000, that will not be prorated. Let me show you. If we talk about with respect to the pensions, few things are also available in the tax rates and allowances. You can see for personal pension scheme, contribution limit for these 2 fiscal years were 40,000, and for these 2 fiscal years, that's 60,000. So if person's adjusted income is less than 260,000, So for this year, we can say the maximum pension contribution limit is 60,000. Are you getting my point? I'm joining the dots. When the person's adjusted income is less than 260,000, and this amount is available in the tax rates and allowances, as you can see from here, when the person's adjusted income is less than 260,000, for this year, the available annual allowance for pension purposes will be 60,000, from which person has already contributed an amount of 10,000. He is going to further contribute. So we have to tell the tax implication with respect to the additional contribution if a person contributes in personal pension fund. T has been self-employed since 6 April 22 and has been a member of the pension scheme for the tax year 23-24 onwards. T's trading profits and gross personal pension contribution. The gross personal pension contribution since he commenced his self-employment have been as follows. Here we have few years data, tax year 22, 23, 23, 24, 24, 25. He became the member of the pension scheme from this year, means he is the member of the pension scheme for these 2 tax years with respect to this scenario. Trading profits are given and the pension contributions are also given. Why it's 0? Because a person was not member of the pension fund in the fiscal year 22-23. So that's the reason it's showing as 0. He became the member of the pension scheme from this year. So we can consider the contribution he made, that is 46,000. And all these amounts are gross. How we can say that? Because it's clearly mentioned the gross personal pension contributions are given. If these amounts are given as net, we have to convert these amounts into gross amounts. So let's calculate. For pension contribution, first we should calculate the total specific limit. What we are required to calculate the total specific limit for contributing into the pension fund. For the fiscal year 24-25, there is annual allowance. Current year annual allowance is 60,000. And if you want to calculate that, what is the maximum amount of the pension contribution, that would be the total specific limit. If the annual allowance for this year is 60,000, we can also consider previous 3 years unused allowance. Let me write 3 years, 22-23 and 21-22. Standing at 24-25, these are the previous 3 years and unused annual allowance of these 3 years can be brought forwarded. But I would not be considering the unused allowance for these 2 years because person became the member of the pension fund from this year. Although the rule is current year allowance and the previous 3 years unused allowance can be considered in the calculation of total specific limit, but he became the member of the pension fund from fiscal year 23-24. So I'm not going to take previous 2 fiscal years. This year standard amount as also given in the tax rates and allowances. For this year, the standard amount was 60,000. And how much this person has used by making the contribution. So this limit is used as 46,000. So what is the unused limit? Can you quickly calculate? I'm waiting for your answers, please. Looking at chat box. 14,000. Thank you. So current year allowance and the previous year unused allowance both would be added to find the total specific limit which is available for the pension contribution for this year will be 74,000. Now, already contributed, that this amount is also given in the question. Already contributed, that was a maximum amount for contributing into the personal pension fund. But person has already contributed an amount of 10,000, which is also mentioned in this scenario as well. So already contributed in the fiscal year 24-25. So that is, he has already contributed an amount of 10,000. Limit available for contribution. Limit available for additional contribution. The difference of these two, that will be for this fiscal year, person can further contribute 64,000. So we need to outline the tax implication for each of the investment alternative. we have solved calculations, but what you think? What should be the answer? How we can write the answer in actual terms? Although we have shown our calculation aspect, but the question requirement is to outline the tax implication. I'm giving you 1 minute time to think. That was the total allowable limit for the contribution. Person has already contributed in the same year as 10,000. Limit available for additional contribution in this year is 64,000. What are the further points which we can write? Because we have to outline the tax implication for each investment alternative. Okay, what we can write now, we can write Mr. T can additionally contribute in personal pension fund to the extent of 64,000 without being charged annual allowance, without incurring an annual allowance charge. Remember where from we are taking this point? Because if a person contributes into the personal pension fund in excess of the available limit, then on the excess amount, there would be a charge named as annual allowance charge. So for this person, the total allowed limit was 74,000, from which he have already used a limit to the extent of 10,000. So that's the remaining amount. To this extent, if person would further be contributing into the pension fund, that will, at that time, there will be no annual allowance charge. Second point, if excess contribution, then annual allowance charge is applicable based on the topmost rate of tax. So I can tell you, for tax planning question, anything can be asked from any area. So you can see this question part is asked from the pensions, right? Are you guys okay till now? Are you getting all these points? In case if you are unclear to any point, you may please write, you may please unmute yourself, and you can ask your queries. And if you are okay, if you are getting these points, if the things are crystal clear, we can move forward then. Your confirmation is required, please. Rest of the students, please. Be quick. Perfect. Perfect. All right. Moving forward. Second investment alternative, this area is from inheritance tax, gift to daughter. Examiner has asked us to outline the tax implication for each investment alternative. Here we have the second one. He will make a cash gift of 100,000 to his daughter when she gets married on this date, and this date is in the fiscal year 24-25. He has not made any previous lifetime gifts. So you can see this area is asked from inheritance tax. Remember, in inheritance tax, there are two types of transfers. If an asset is transferred in life, so there could be two types of transfer. One is called PAT, and second one is termed as CLT. When an asset is transferred from a person to other person, so that is potentially exempt transfer. And when any asset is transferred from a person to a trust, so such asset transfer is termed as chargeable lifetime transfer. So I can see that's a PAT transaction in lifetime. What will happen? Can you please think for a few minutes, for a few seconds? Can you please relate? If it is a PAT, the value of PAT is 100,000, and this PAT is being transferred in this fiscal year. How we can calculate the net value of PAT? Remember the concept? Deduct the annual exemption. Current year annual exemption is deducted on a first priority. Current year means the year in which the asset is being transferred. So if asset is being transferred in the fiscal year 24-25, we can use annual exemption of 3,000. Furthermore, previous year annual exemption can also be deducted. And if it's first time, if it's his first transfer, so the person has not used previous year exemption. Yes, Usman, I would be taking that as well. Don't worry. So if that's the first lifetime transfer, so we can also use the previous year available annual exemption to the extent of 3,000 plus. You can see this asset is being transferred at time of marriage. So another exemption which we can deduct is the marriage exemption. For marriage exemption, amount is 5,000 pounds per parent, like father and mother both have each limit as 5,000, and from any other person that is 2,500. So I'm also going to take the marriage exemption. After taking the annual exemption, I'm also deducting the marriage exemption as 5,000. So resultingly, the net PET value is calculated as 89,000. Now, what are the theoretical answer? Because we have to outline the implication. We have just showed the working, we have just showed the calculation, but that's not the appropriate answer to the requirement. Think, what will happen if an asset is transferred in life to a person? So that is PAT. So what will happen when any potentially exempt transfer is there in lifetime? Although we have calculated the net value of PAT, but we know one thing, that this PAT is, so we are now going to outline the tax implications. PAT is exempt from IST in lifetime. It will become taxable. When it will become taxable? If transferor dies within 7 years after transfer. So if this is the transfer date, can you quickly calculate the 7 year? To be exact, what is the date after 7 years from this date? 26, 27, 28, 29, 30, 31, 32. The date will be 29th March 2032. So that's exactly after 7 years. So we can write second point as well. Thanks all for answering. It will become taxable if Mr. T dies before 29th March 2032. And even if person dies before 7 years after transfer, this asset will become taxable. But the next point could be, if transfer date, if the time gap in between I'm actually going to take the taper relief concept now. Very right. If the time gap in between the transfer date and that date is minimum 3 to 4 years, then any IST can be covered by the taper relief. We are not required to show the impact of the taxes and what will be the amount of taper relief. No. If the time gap in between the transfer date and that day is minimum 3 to 4 years, the minimum time must be 3 years. But if the time gap is in between 3 to 4 years, then we can taper relief, and the taper relief percentage will be 20%, right? But it's not necessary to mention the percentage. We are just outlining the tax implications. Furthermore, if Mr. T survives till 29th March 2032, then If it is more than 7 years, I'm going to take that point now. If Mr. T survives till 29th March 32, then this PET, this PAT will remain exempt at death time, will remain exempt from IST at time of death. Agree with all these points? Quick feedback. Are you guys agree with all these points? All right, good to know. Moving forward, let's talk about the third alternative. Remember this name? ISA, Individual's Saving Account. If a person invested in such account, any interest income, any dividend income will remain exempt from taxes. And each person has maximum ISA contribution limit, investment limit for a year. That is X amount. I'm waiting for answers from your side. What is the maximum amount for the ISA investment for a fiscal year, which is available to each person separately? Perfectly answered. That's 20,000 pounds. T will invest the maximum possible. Again, this word is important for us. This word suggesting us that the person has already invested somewhere in ISA. Now he would be additionally investing in the individual savings account. He will invest the maximum possible additional amount into ISA for this tax year 24-25. He has already invested 5,400 into a cash ISA during the tax year, having previously invested of 6,200 into a cash ISA during the previous tax year. By the way, why previous year thing is given to us? For example, if previous year limit was 20,000 and person only use this limit to the extent of 6,200. So what is the available previous year limit available? That is 13,800, which is unused from the previous year. Should we use this amount somewhere? Can we use the previous year unused limit for ISA to the next year? Can we brought forward this amount? Yes or no? A big no. Why? Because for ISA investment, there is investment limit 20,000 available for each year. If person has contributed in previous year to the extent of 6,200, and if there is an unused limit, that unused limit cannot be carried forwarded or brought forwarded to next year. So this point is just given to confuse ourselves, and we must ignore such points if these have no implication. Although we shall be writing a point over here, because the reason the examiner has given this point, examiner wants us to write something on this, because if the previous year data is given, so we have to relate to our scenario while answering. First point, ISA investment limit for each person is 20,000 pounds per year. As Mr. T has already invested 5,400 in fiscal year 24-25, so he can additionally invest
Rana, let me let you. I may just have to watch this video.
So he can additionally contribute. What's the difference? If this year limit is 20,000 and if he has already contributed an amount of 5,400, so what's the remaining limit available? To that extent, it further can be invested. Quick answer, please. That's 14,600. Okay. So he can additionally contribute 14,600 in either Currently, he has invested in cash ISA, but the remaining amount, to this extent, he can invest in either the cash ISA or the shares ISA. So this is how we beautifully covered the types of the ISAs. We have nowhere mentioned that there are two types of ISAs, the cash ISA or stock ISA. No, it's not required to mention these separately. You can cover such points while answering your statements, right? So this is how we covered this point. He has this limit available for the tax year 24-25, right? And this amount can be invested, can be contributed either in any type of the ISAs. Furthermore, previous year unused ISA limit, which was you're asking what is the next ISA, sorry? The shares ISA or the stock ISA, the cash ISA or the stock ISA. Previous year unused ISA limit of 13,800, which we calculated by taking the previous year allowed amount and the previous year contribution. So we found this 13,800. This cannot be brought forwarded to the fiscal year 24-25. So now that was the answer to the third part and the last part of this question. While solving this question, we recalled three different areas of tax. Number one was the pensions. Second was, to some extent, we talked about inheritance tax. And thirdly, we talked about ISA, individual savings account. Now we are fully done with this question. Moving forward, but before moving forward, can you please quickly tell, is there any confusion, any unclarity, or if all things are okay, we can move forward then? Be quick, please. All right, thanks for your confirmation. I'm moving forward. And here we have a scenario that's for 10 marks. And we know tax planning questions are always asked for 10 marks in section C. This scenario relates to one requirement. And here is the requirement. Please read the requirement at first instance. Then by keeping the requirement in mind, read this scenario. Please do not read this scenario directly. And then requirement, no. Our priority while attempting kit questions, while attempting real exam questions, read the requirement first. And then by keeping that requirement in mind, then read the scenario. So this question, which is of worth 10 marks and has one requirement, and the requirement is in front of us. Calculate the overall tax saving and NIC, means there could be two savings, the tax saved and the NIC saved, for the year ended 5th April 24, if Joe had instead paid him gross director's remuneration of 8,000 and dividends of 40,000. There is a current situation which is available in this scenario. We have to compare that situation with the proposal, and we have to find the tax saving and the NIC saving. And what's the proposed situation? If this person would be paying gross salary to himself as 8,000 and the dividends of 40,000, so would be there any tax saving or not? There is a current situation and here is a proposed situation. Note, you are expected to calculate the income tax payable by Joe, the class 1 NIC payable by both the person and the company, and the corporation tax liability of company for the year ended 5th April 25. So I'm giving you 8 to 10 minutes time, maximum 8 minutes time. Now read this scenario and try to attempt the things at your own first. The overall time management is very important for us to complete the paper in 3 hours time. If we have 3 hours, multiply with the minutes, so we have in total 180 minutes for attempting paper. And we are solving 100 marks paper. So 1.8 minute time is available for 1 mark. And if you are solving 10 mark question, we can simply multiply the available time, so we can find the total time which is available to solve 10 mark questions. So that will be completed, that must be completed within 18 minutes time. And in the same manner, if you are attempting 15 marks question, that must be completed. 15 into 1.8 will be 27 minutes. So 27 minutes time to be spent on income tax question, 27 minutes time to be spent on corporation tax question. And if you are solving, for example, section section A, there are 15 questions, and each question worth is of 2 marks. For 30 marks, if multiplied with 1.8, so how much time is available for section A? That is in total 54 minutes. In 54 minutes, you must complete your section A. In 54 minutes, you must complete your section B. So you can easily determine that how much time is available for solving each question. As now we are going to solve this tax planning question, so this must be completed in total 18 minutes time, because it's for 10 marks. And available time for 1 mark is 1.8 minutes per mark. So simply multiply 1.8 with 10 marks, so resulting to 18 minutes time. Okay, I'm starting. What's the current situation? J is the managing director and shareholder, 100% shareholder of OK Joe Limited. This person has created a company by its own name. And in previous session, in previous class, we talked that whenever a person would be having own company, then at that time, person income tax liability, person NIC, his company, corporation tax liability, his company's NIC, 4 things are to be computed in that case. And we performed a question with respect to same concept. J is the managing director of OK Joe Limited and 100% shareholder as well. He has always withdrawn the entire profits of the company as director remuneration. There are 2 methods that a person can withdraw money from its own company. That withdrawal can be in the form of employment income. That withdrawal can be in the form of dividend income. But currently, person is taking the entire profits from the company, the whole amount of profits after paying taxes and all that. The entire amount of profits will be withdrawn as director remuneration. But from here, but given a recent increase in profitability, he wants to know whether this basis of extracting the profits is beneficial or not. For the tax year, for the year ended 5th April 25, OK Joe Limited taxable trading profits before taking account of director remuneration are 65578. And we know one thing, that company, for employing persons, company have to pay class 1 employer NIC on the gross cash earnings. And that's the reason, after allowing for employers class 1 NIC, that is given as 7794. Means if company has this amount of profits, firstly, this NIC would be paid by the company to HMRC, and remaining amount would be taken as salary 57784. If the total profits of the company are paid to HMRC and the remaining amount to person as salary, then the company's profits will be 0, on which no corporation tax liability will be there. Currently, only the person's income tax liability and person NIC will be there. There will be no corporation tax liability, but the company NIC is directly given as its employer's class 1 NIC. Means the company NIC is given as 7794. The figure for employer's NIC of 7794, this amount, from this amount, 5,000 of employment allowance has not been deducted. Why? This employment allowance will not be deducted in 2 situations. Where there is a sole employee of the company, this person has created this company at his own name. So if there is only one employee of the company, then employment allowance will not be available to deduct. And if the previous year employer contribution, employer NIC is more than 100,000, So these two are the possible situation wherein you are not allowed to deduct the employment allowance of 5,000. Hope you remember this point. The figure of employer's NIC of 7794 does not deduct 5,000 employment allowance because Joe is the OK Joe's Limited only employee and this is not available. Even this statement is not mentioned, we cannot claim this 5,000 allowance because J is the only employee of the company. So for meeting the requirement for finding the tax saving or not, I would suggest you to take the screenshot of the question. So as I would be solving the requirement on the next slides, you can see the question side by side. So from where I'm going to take the amounts and all that. This situation is to be solved according to this existing scenario. And again, we will solve the situation according to the proposed scenario. And then we will compare both the situation to find any tax saving or not. Okay, moving forward, here we have a format to be followed. You can create the same format on the CBE platform using a spreadsheet. You can mention the existing, that's in working one, proposal as mentioned in requirement, that's according to proposed situation, proposed working two. Currently, there is a person and there is a company, person income tax liability, person's NIC, persons operating this company. So the company's corporation tax liability and company's NIC. If I want to write the answer of the few things without performing any calculation, so I can write. Company NIC is directly given as in question as 7794. So I have mentioned over here. I'm going to write the company's corporation tax liability as 0. Because if the company profits are in total 65,578, from which company has paid 7794 as the employer's NIC, and the differential amount of 57784 is paid as salary, so there are nil profits. And if for company there are nil taxable trading profits, so resultingly there will be no corporation tax liability because the entire profits are withdrawn as salary after paying this NIC. So if the company profits are 65,578, from which company has paid the NIC and the salary, both these are the allowable deductions for the company. So if the company profits are distributed in this way, so resultingly no taxable profits, hence no corporation tax liability. So I have mentioned it as 0. Are you clear till now? Are you clear till now? Because the company's profits have been distributed this way currently. So that's the reason if there are no taxable profits of the company, has no corporation tax liability. Two things yet to be computed for existing situation wherein the person has received a salary as director remuneration of 57784. So I'm going to perform working one now. For working one, we have another slide for working two to solve the proposed situation. I'm going to solve working one. For Joe, Joe is getting salary. Joe is getting salary of 57784. So person's salary would be reported to an income sheet. And in income sheet, there are multiple columns. For example, non-saving income, the saving income, and the dividend income. Salary being part of employment income is reported to non-saving column 57784. No other source of income is given. So this amount is considered as total income. And in absence of qualifying interest, same amount is considered as net income. What we deduct from the net income? That's the personal allowance. Personal allowance for this fiscal year is 12570. No need to taper it. Resultingly, taxable income is calculated as. Can you please quickly calculate the taxable income by deducting the personal allowance from the net income? What's the amount of the taxable income? 45214. Thank you. This amount is to be taxed to some extent at basic rate, and the differential of 7514, I guess that's the corrected amount. To this extent, the tax rate will be 40%. 7540 and 40% of this amount will be 3006. And the sum of these two is the income tax liability, 3006 and 7540. So 10,546 is the income tax liability for the person. So in existing situation where the person is drawing salary from the company, is getting salary from the company, on such amount, person has to pay the income tax, and we just calculated the income tax liability as 10546. Let me write over here. Last thing to compute in existing situation, that is NIC. This salary is considered as gross cash earning. So for gross cash earning, class 1, employee NIC, employee NIC is also termed as, can you please tell? Class 1 employee NIC is also termed as, I'm waiting for that term, whether it's primary NIC or secondary NIC. Very right. When we do compute the class 1 employee NIC, that is a primary NIC. And that is to be computed on the gross cash earning, and gross cash earning are involved in this question as 57784. Remember the limits and all that for calculating the NICs. If you are unaware, so such information is also given in the tax rates and allowances. So you can open, you can check during your exam time. Let me highlight. In this situation, we are going to compute the class 1 employee NIC. To some extent, it's nil. If it is based on gross cash earning, and gross cash earning in this scenario is 57784. From this value, to some extent, it will be nil, then at 8%, then at 2%. So let me start calculating. From 1 to 570, to this extent, NIC is not applicable, so that's 0. From 1 to 571 to the other limit of 50270, the differential is 37700. On this amount, NIC will be calculated at 8%. So 8% amount will be 3016. And from 50271 to the total gross cash earning of 57784, the differential is 7514. And on this amount, NIC will be calculated at 2%. And you are telling me the amount of 2% is 150. And the sum would be, I'm relying on your calculation, assuming that you are calculating perfectly, you are calculating correctly, right? So 3166 is the NIC. In existing situation where the person is getting entire amounts of profits as salary after paying the employer's NIC, so on that amount, we calculated the income tax. On that amount, we also calculated the NIC amount of 3166. If we add all these amounts, can you check the total piece? If you add all these amounts, the sum is 21506. Okay. So we just solved the existing situation. What's the proposed situation now? Let me show you again. Proposal is, instead of taking the entire amounts of profits as salary, instead of taking this amount of salary, if person will take 8,000 as salary and 40,000 as dividends, means if person follows a mixed remuneration package, to some extent person is getting salary from company, and to some extent the person is getting dividends from company. So what will be the total of these things? And then we will compare these two values to find the any tax saved or not. So other part of the question is yet to be computed according to the proposed situation. Keep in mind, now the salary amount is 8,000 and the dividends amount will be 40,000. We have to calculate all these things separately for proposed situation. So I'm moving towards the working 2. Okay, let's start. For working 2, we have to solve both the things for company and both the things for person as well. Companies incorporation tax liability, companies NICs, person's income tax liability, and the person's NICs. As I have shown you the format, we would be calculating all these 4 things separately in proposed situation. So let's start from here. Company's profits will be 65578. If salary, instead of taking the entire amounts of profits as salary, instead of taking this salary, if now we consider the proposed salary of 8,000, so if this salary is deducted from here, plus employer class 1 NIC, companies also do pay the employer class 1 NIC on the gross cash earnings. And if in the proposed situation, if we talk about the gross cash earning of the employer and the salary amount is 8,000, so will there be any class 1 employer NIC or not? Be quick. Because gross cash earning, perfectly answered, gross cash earning is in between the threshold amount. If the gross cash earning is below 9,100 pound, there will be nil NIC paid by the company. Very important and crucial point. Agree with it? Yes, all of you, please. If the salary amount is, for example, 18,000, if salary amount is instead of 8,000, if salary amount is 18,000, then for surely to this extent it will be nil, and the remaining amount there will be company will be paying an NIC at 13.8%, and X amount is also deducted as allowed expense for the company. But currently there will be no NIC because the NIC, the current gross cash earning is below this threshold of 9,100, so company would not be paying any NIC, right? After deducting these two things, the remaining profits in the company are, can you please suggest the answer from 65578? If we deduct 8,000, so what is the differential amount of? 57578. In the profits, we do add the franked investment income, and there's a dividend which is received from the non-associated companies. There is no franked investment income, so resultingly the augmented profits of the company. Augmented profits of the company are calculated as 57578. You can see this augmented profit is more than the lower limit of 50,000, but it's less than the upper limit of 250,000. So what will be the tax implications then? If this is the case, we can say that rate of tax will be 25%. At the same time, marginal relief will also be available. Very right. This tax rate is to be multiplied with the taxable profits, not the augmented profits, although both the amounts are same. But over here, we must take the taxable profits, which is in this situation are 57578. If 57578 is multiplied with the tax rate of 25%, 14395 is a corporation tax liability. And I'm hopeful that you do remember the formula for calculating the marginal relief. What is the marginal relief? Remember the formula? Upper limit minus the augmented profit, 57578. Multiply it with the standard fraction of 3/200 and multiply it with 1. Although instead of 1, we have to consider the taxable profits and divided by the augmented profits. But if both these amounts are same, resultingly there will be 1. So you are telling me an amount of 2,886 as marginal relief, and from 14395, if 2,886 is the marginal relief, so net corporation tax liability will be 11,509. That is net corporation tax liability. 11,509. And for this thing, we have already calculated company has not to pay any NIC in this situation. So I'm also going to write 0 over here, because as the companies with giving salary to employees 8,000, which is below the threshold of 9,100, so there will be no company NIC. I can also write the answer over here. Person will not also be paying any NIC. Why? Think if now the gross cash earning is 8,000 And for employee class 1, NIC is nil to this extent of 12570. If this proposed gross cash earning is now below this threshold, so that's the reason person will not also be paying any NIC. Agree? So I have directly considered 0 over here. Are you getting this point? Why person would not be paying any NIC? Because for employee, if the gross cash earning is less than 12570, which is 8,000 in this situation, so employee has not to pay any NIC. Only one confirmation. What about others? Are you agree with this point? Okay, all right. Moving forward, with respect to person, as now the person would be getting two things from the company. One is to be recorded in the non-saving. Second income is to be recorded as dividends and the total. Employment income of 8,000 and dividend income of 40,000. I'm taking these amounts from the proposed situation as mentioned in the requirement of the question. The sum of these two will be 8,000 and 40,000. That will be 48,000. That is the total income. And in absence of qualifying interest, there's a net income as well. And the total net income is calculated as 48,000. From the total net income, we deduct the personal allowance, 8,000 from the first column, and 4,570 can be deducted from the other column. And from total amount of personal allowance is deducted. Now, let's calculate the taxable income. Taxable income for first column is being calculated as 0. For second column, that's 35430. And that will be the total as well, 35430. We have now only one column to tax, that's a dividend column. And for dividend column, there is exemption available. And at the same time, we must follow the basic rate band limit. This band limit will firstly be covered by the exemption amount. Remaining band limit will be 37,200. If this is the exemption amount at which there is no tax from the total dividend, now 37,200 is falling in the basic rate band limit, and dividend rate in the basic band is 8.75%. So now this is how total band limit is fully covered, and any additional amount from 35430, 500 and this and this. So what's the remaining amount to be taxed? Okay, my bad. We are making a mistake over here. Our total amount is falling over here. What's the differential amount? Okay, let me recalculate. You can see, although the dividend income can be fall in exemption, then the basic rate band and the higher rate band. Basic rate band limit is 37,700 covered by the exemption amount. Remaining basic rate band limit is 37,200. But the remaining amount, what's the remaining amount? From 35430, if exemption is deducted, so remaining amount is 34930, and the whole amount is falling in the basic rate band. And after covering this entire amount from 37,200, still there is an amount which is available in the basic rate band limit. So from the total taxable dividend income, 500 is exempt, and the remaining amount. From this amount, if we deduct 500, the remaining amount is falling in the basic rate band limit. So that will be at 8.75%. So 34930 into 0.875. The resulting amount is, Usman, what's the resulting amount? Anyone, please? 3056. 3056. The sum of these two will be the tax liability, and the tax liability is calculated as 3056. I'm writing this amount over here. Are you agree with this working? Any unclarity, please? Okay, perfect. So we calculated the income tax liability of the person as 3056. We got all the values, and you are telling me the total tax cost of doing business according to proposed situation is 14565. And tax saved is a net of these two. According to existing situation, the tax and NIC liability in total was 21506, but according to the proposed situation, wherein the person is withdrawing 8,000 salary and 40,000 as dividend, the resulting total NIC and liabilities are 14565. So the tax saving is calculated as 6941. That's the difference of these two amounts. So now it's beneficial for this person to follow the proposed situation because it's resulting in the tax saving of 6941. Instead of taking this amount of salary, person is required to take 8,000 salary and remaining amount of 40,000 as dividends. So resultingly, it's gonna save our tax by 6941. Now we met the requirement, that was calculate the overall tax and NIC saving for this fiscal year, for this year end of 5th April 24. We are done with this question. And keep remember, same like questions are asked in your real exam. There is nothing new. You will not, inshallah, you will not find any new thing. The scenarios which we have discussed in previous lecture, the scenarios which we are discussing in today's class, such scenarios are exactly examined in section C for tax planning. It's all about your smart thinking, that how you consider, how you read the scenario, how you plan the scenario. You can easily answer all these things. If you're okay, we can move forward. We have another scenario, same like things to discuss more. And should we move forward? All right. Here we go. Again, I'm pausing my recording and giving you 5 to 7 minutes time to read the requirement, to read the scenario, plan your answer. Then you can also see the current situation which is given in scenario and the proposed situation. Take your time, read the scenario, plan your answer. You have 5 minutes time. In this scenario, examiner has asked the new company's corporation tax liability, assuming the rates and threshold of corporation tax for the financial year 24 continues to apply. As you have read the scenario, you are aware of this fact that the person is currently self-employed. He is running an unincorporated business and paying taxes and all that. But the proposal is to convert the business into a company. The sole trader business is converted to a company. So what will be the corporation tax liabilities? Whether it would be beneficial for the person to convert the unincorporated business to an incorporated business or not? Be with me. Sam is currently self-employed. If he continues to trade on a self-employed basis, his trading profits for the year ended 5th April 25 is forecasted to be 100,000. Based on this figure, Sam's total income tax and NICs, the sum of both these amounts for the year ended will be 31,999. So we have a format, we have set a format. Currently the person is self-employed. His income tax and NICs, the sum amount is given as 31,999 as per the scenario. Currently, there is no company, so there will be no corporation tax liability, no NICs, because he is currently self-employed. And if a person is self-employed, and in that case, person would be paying the own taxes and the own NICs and not the corporation tax and no company's NICs. Getting this point? We have set this format according to the scenario. You have to plan accordingly as per given situation in your exam question. Thereafter, Sam is considering incorporating his business at the start of this fiscal year. And incorporating means Sam is considering to register this business, this sole trader business, as a company at the start of the tax year. And forecasted taxable profits for the new limited company for the year ended will be same amount of 100,000. If he continues to trade on a self-employed basis, the tax liabilities and NICs for the tax year 24-25 will be 31,999, but there will be no change in profits amount. It's 100,000 under self-employment and 100,000 according to a company business. After paying the corporation tax, obviously, when the person would be incorporating, there will be company taxes, there will be company NICs, and the remaining amount can be withdrawn either in the form of salary, either in the form of dividends, either in both forms. After paying the corporation tax, Sam will withdraw all of the profits by paying himself dividends during the tax year 24-25. And the requirement is the new company's corporation tax liabilities, assuming the tax rates of previous year and the current year. By the way, previous year and current year tax rates for company taxes are same. There is no change, right? Okay. As per the given situation, we have mentioned the values according to the self-employed business, and the total in this situation is calculated as 31,999. We have to solve the situation according to the proposed scenario that's incorporating the business, and I'm going to solve I'm going to get all of the values by solving the working one for company business, wherein there will be company taxes, company NICs, and person would be taking, after paying the corporation tax, person will be getting the amount from the company as dividends, and whole amount will be withdrawn as dividends for this tax year. So obviously, person's income tax liability will be there on the dividend received and the NIC's implications, right? Moving forward towards the working one for Sam, according to the proposed situation, I'm going to solve if company's profits will be, I'm solving with respect to company first. I'm going to solve company corporation tax liability and company NIC. For company, taxable trading profits are 100,000. Adding the franked investment income, which is not in this scenario, so the augmented profits are 100,000. This augmented profit is more than the lower limit of 50,000, but it's less than the upper limit of 250,000. Again, same as previous question, rate of tax will be 25%, but a marginal relief will also be available. If the rate of tax is 25%, by the way, if this is the case, instead of calculating the tax and marginal relief separately, we can directly use a percentage, that is marginal rate of tax. Remember that concept? Perfectly answered, Usman. That is 26.5%. Instead of calculating tax and marginal relief separately, we can directly use the marginal rate, because if the augmented profits of the company are in between these two limits, in that case, effectively marginal rate of tax is applicable, which is 26.5%. So I'm not going to use 25% and then taking the marginal. Okay, by the way, for our own understanding, let me calculate The corporation tax over here, 25% of the taxable profits, which are 100,000. So that will be 25,000. Deducting the marginal relief. Can you please calculate the marginal relief? That's 2250. The net corporation tax liability is 22750. Although we have solved according to the tax rates and marginal relief, but recalculating the same thing according to the marginal rate of tax, that is 26.5, if multiplied with taxable profits of 100,000, are we getting the same amount or not? Can you please write the formula which you are following for calculating the same? Yes, exactly. In form of bands, right? So I'm following your steps from 1 to 50,000. To this extent, rate of tax will be 19%. So 50,000 into 0.19 will be 9,500. And on the above amount, from 50,001 to total taxable profits of 100,000 on the differential, what will be the tax rate? That is 26.5%. That is 13250. Adding both the values to get the tax liability as 22750. Both these values are same if we follow either method, right? I'm going to write the corporation tax liability of 22750 according to proposal. What next is there? Company NIC. Let me write it as 0. Now find the reason why we have considered company NIC as 0. Because after paying the taxes, company earned 100,000 of profits. Company paid 22750 as net corporation tax liability. What will be the remaining amount? That is 77250. That's a retained profit. Retained profits are also termed as the post-tax profits. Means the profits which are after paying taxes. From the total profits, if this amount has paid as taxes, so that's a retained profit. This retained profit, also termed as the post-tax profit, is given to shareholder as dividend. That's what was there in the question scenario. Let me show you. After paying the corporation tax, Sam will withdraw all of the profits by paying himself as dividend. So what's the post-tax profits after paying the taxes? So that's an amount of 77250. Now this amount is given to shareholder as dividend. And there are no NIC implications. Let me write it clearly. If this amount is given to shareholder as dividend, there are no NIC implications for the company on the dividends paid. So that's the reason we have considered it as 0, because on paying dividends, there are no NIC implications for the company who is paying dividend, because dividends are paid from the post-tax profits. So it's company's discretion whether to keep this amount within the company or whether to distribute any X amount from this profit to the shareholders. or whether to distribute all of the retained profits to the shareholders, there will be no NIC implications for the company who is making dividends payments to shareholders. Are you getting this point? Okay, moving forward. As we are now done with the company's taxes and NICs, we found the corporation tax liability and the NIC, which is 0, by the way. Before solving for person, let me write Sam's NIC will be 0 in this case, because if Sam would be taking this amount as dividends from the company, so person who received dividend, on dividend there are no NIC implications. Also got this point? I'm taking you step by step. Sam would be taking dividends. On the dividend received, there will be no NIC paid by the person on the dividend received. So that's the reason we have mentioned it as 0. What next is there to solve the person's implication? Only the person income tax liability. Although I would be writing this point, Sam will not be paying any NIC on the dividends received. Right? So we have mentioned it and we have recorded 0 NIC over here. What next is there? There are 3 columns for income sheet, but no non-saving, no saving, only the dividend income column will be there. And dividend income, which is received by the company, as 77250. There is no other income. There's a total and there's a net income. From net income, we deduct the personal allowance, 12570. I'm waiting for your answers. Taxable income for this person, for this question, will be 64680. On this dividend income, 500 is exempt and taxed at 0%. And the basic rate band limit is 37,700, reducing by the exemption amount 37,200 is the remaining band limit. To this extent, 8.75% is applicable. Can you calculate? 37,200. Now you can see band limit is fully covered. If band limit is now fully covered, so the remaining amount of taxable dividend income will fall in the higher rate band. So you telling me the amount of 26980? Are you sure? What's that amount? 37,200 into 0.875. Okay, there's the remaining amount. Over here, we are getting there's a remaining amount. Okay, here we got the value of 3255 and the remaining amount you told that 26980. How you found? From the total taxable dividend income, if 500 is exempt and this amount is falling in the basic rate band, so the difference amount will be 26980, which is now subject to tax at high rate. And for dividend column, higher rate is 33.75%. And resultingly, we got a value of 9106. The sum of all these 3 values will be the total income tax liability for this person. What's that amount? 12361. If we write 12361 over here, let's sum up all these values. That's becoming 35,111. is there tax saving or not? What's the difference in between these two? $3,112. That's not tax saving. That's the tax cost, wherein there is no saving. So resultingly, we can say that that's tax cost, not the saving, right? So what, being a tax advisor, what's your suggestion to the person whether to incorporate this business as a company or not? Self-employment basis are fine. So let me write over here. It's not beneficial for Sam to incorporate business as it's resulting in higher tax cost of 3,112 as compared to the existing situation of self-employment. So this is how you can write the conclusive statement. So it's not beneficial for Sam to incorporate business as it's resulting in higher tax cost of 3,112 as compared to the existing situation of self-employment. So it's better to continue on a self-employed basis, because over here the tax liabilities are more than the self-employment basis. Are you clear? Are you guys clear? Okay, perfect. Another question is, here is the scenario. Z is a director and she is the sole employee and 100% shareholder in Zoot Limited. Z is a director and there is only one director, and the same person is 100% shareholder of the company as well. For the tax year 24-25, Z wants to take a bonus of 10,000 from her own company, either as additional salary or as an additional dividend. For the tax year 24-25, Z is a higher rate taxpayer and having already taken gross director remuneration of 60,000 and dividend of 20,000, and dividend nil rate band has therefore already been utilized from Zoot Limited. Okay. Person is the employee of the company and the shareholder of the company as well. That's 100% shareholder. These scenarios which we have previously covered, we have attempted multiple questions with respect to same thing, but that's a new thing which is asked in this question. Person wants to extract further 10,000 from the company, but now considering whether that 10,000 amount is to be taken from company as in the form of salary or whether to extract 10,000 in the form of dividends. So what will be the implication if the director remuneration is extracted? If the additional amount is extracted in the form of dividends, we need to consider the implication with respect to the company and with respect to the individual as well. And it's nowhere mentioned. Let me write, just assume this company's tax rate is 25% and marginal relief is not available. When this happen? Can you please suggest when this happen? For a company, we have just assume the status that the company is paying corporation tax at 25% and marginal relief is not available. When it happens? When the augmented profits are more than upper limit of 250,000. When this happens? When, obviously, if we have assumed that, that means augmented profits are more than the upper limit of 250,000. So this scenario is applicable. Keeping all these things in mind, let's start discussing with respect to company over here. What will happen if company would be paying the additional salary? If this amount is paid as additional director remuneration for company, for person, and for this situation, dividends we will talk about over here, company and person. Now it's your time to think. If company has paid additional 10,000, so that will be additional salary of 10,000 is an allowed expense for company, which results in decrease of profits, resultingly, if lower the income, lower the tax liabilities. If this, we are talking about company, my dears, keep remember we are talking about this situation for company. If company would be paying this 10,000 to employee as salary, so salary is an additional expense, additional salary of 10,000 is an allowed expense for company, which results in decrease of profits, resultingly decrease in corporation tax liability by, can you quickly calculate, if further 10,000 expense is deducted from profits and company paying taxes at 25%, so how much corporation tax liability will be saved? 2,500, resultingly decrease in corporation tax liability by 2,500. At the same time, salary is gross cash earning on which company has to pay class 1 employer NIC at, by the way, company is already paying a salary to person which is 60,000. And if you look at the employer NIC, to some extent it's nil, to some extent it's at 13.8%. And if the person's existing salary is 60,000, that means from 60,000 to some extent it's nil, and excess amount is NIC on excess amount is calculated at 13.8%. If further 10,000 is given to employer's salary, so on the additional salary, NIC will also be increased by 13.8% at a rate of 13.8%, which is, can you please tell, which is 1380 net cost for the company. Net cost for company will be, how we can compute the net cost? On one hand, this expense is reducing the corporation tax liability. Okay, net cost for the company is being calculated. Let me show you. Total expenses minus tax saved is equal to net cost for the company if company paid additional salary. What are the total expenses? Total expenses is the salary given to employee, that's the expense for the company. At the same time, being paid the salary, which is the gross cash earning. 1380 is the NIC which is to be paid to HMRC. So that's the total expense. But due to this expense, our tax is gonna save. Our tax is gonna save by the way. If overall, okay, let me also check the tax saving with respect to NIC as well, because NIC, the additional NIC is also an allowable expense. Before writing this, let me take another point. Although that's a cash outflow, this also result in tax saving of, because if that's an expense, so this is also results in tax saving by 1380 if multiplied with the corporation tax rate of 25%. 1380 into 0.25, that's 345. So now let's conclude. From company perspective, there are two cash outflows. One cash outflow is the amount of salary paid. One cash outflow is the NIC paid to HMRC. I repeat, from company perspective, there are two cash outflows involved. The amount of salary which is given to person and the NIC due to gross cash earning paid to HMRC. The total cash outflow will be 11380. From the total cash outflow, if we deduct the tax saved, and tax saved is a sum of both these amounts, 2500 and 345. 2500 and 345. Can you please check the total? So resultingly, that's 8535. No. Sum of 2500 and 345. Osman, how you are telling me the amount of 8535? I'm just talking about the tax saved, the sum of these two amounts. That's perfectly answers to my 2845. And resultingly, if we now net off the total cost and the tax saved, the net value will be from 11380. If we deduct the tax saved, 8535. Perfectly answered. 8535 is the net cost for the company. Net cost for company on providing this amount as salary. Right? Now, think from the perspective of the person. If salary of 10,000, person has already salary of 60,000, person is a higher rate taxpayer, person is already paying tax at 40%, and on the gross cash earning of 60,000, person is already to some extent it's nil, to some extent at 8%, then to some extent person is paying NIC at 2%. If this person is now getting additional salary of 10,000, so what will be the implication for that person? Can you please think? For person, if salary of 10,000, we can say that income tax liability will increase by, with how much amount it will increase by? 4,000. There will be NIC increase by, on the 60,000, it's at 2%. If further 10,000 is added, the additional NIC is also to be calculated at 2%. 10,000 into 2%, that is 200. In total tax increase for the person will be, 4,200. Agreed? Let's conclude. If salary given, if 10,000 given as salary, what will happen then? Net cost for company, because that's the person's own company, net cost for company will be 8535. Net tax increased for person. So net tax increase for person will be 4,200. Can you please sum up these two amounts? We are now considering both these points, the implications for company, the net cost, and the implication for person. Over here, the net increase 12735 is the overall increase for opting this option. But let's solve now. For company, if company paid dividends, then what's the impact on for company on paying the dividends? Can you please check? No corporation tax. No corporation tax liability on dividends paid, because dividends are always paid from the post-tax profits. So it's 0. No NICs on dividends paid. So net cost for company, in this situation, net cost for company will be 0. Agree with this point? Are you getting? On paying dividends, there are no tax implications. Everyone, please. Are you okay with this point? If company pay the same amount of 10,000 as dividends, then there will be no corporation tax implications. Then there will be no NIC implications. For person is already getting a dividend of 20,000. It's mentioned in this scenario. And he has utilized the dividend exemption of 500. And person status is higher rate taxpayer. If dividend of 10,000, person is receiving dividend of 10,000, what will happen now? Can you suggest? ITL increased by, if on the dividend, higher rate band limit is 33.75. So how much income tax liability will increase by getting this amount as dividend? Yes, I'm waiting for your answers. 3375. And NIC increase by 0 because no NIC on dividends received. So overall, the total increase is by 3375. Let's conclude. If 10,000 given as dividends, what will happen then for both? Net cost for company is 0 and net cost for person is 3375. So net cost for company is 0 and net tax increased for person. We just calculated and found a value of 3375. So there's the overall total amount has increased by 3375. So what's beneficial for this person? Whether to take this additional amount of 10,000 in the form of salary or dividend. What do you suggest? Being a tax advisor, now we can suggest. For both the person and the company, in both these situations, this option is beneficial. For this scenario, person must take this additional amount of 10,000 in the form of dividends, because ultimately it's the total tax cost for both the person and company is less than as compared to other option. Are you okay? There are no other questions left for discussion, although few areas are quickly to be recalled for recalling purposes. Now we have further differences in between different tax areas. We are done with the computational aspect for tax planning questions, but yet to discuss many other things. So let's quickly move forward and discuss the things for capital gains taxes and the inheritance taxes. Capital gains tax arises on the sale of asset, the gift of assets, or the lifetime transactions only. And if any asset is transferred at time of death, yes, that's the estate. And if any assets for IST purposes, if in life they transfer to other persons, they are pets. And if they are transferred to trust, they are termed as life CLTs, chargeable lifetime transfers. So for IST purposes, this can be CLTs, this can be pets, and obviously any asset which are transferred at time of death, they are to be covered under estate. Now, relevant value. For CDD purposes, market value of the asset is relevant even if the transfer is in between the connected persons. Even if you have gifted any asset or transferred any asset at less than market value, your disposal must be recorded at the market value. For IST purposes, we do follow a concept named as diminution in wealth or the fall in value. Remember that point? Transfer to spouse or civil partner, it's for CDD purposes, we record these such transaction at no gain, no loss. But for IST purposes, we can simply, any asset transferred in between the spouses are simply exempt from IST. Over here, we cannot write exempt because yes, asset was chargeable. There must be IST to be, there must be CDT, but as now the transfer is in between spouses or civil partners, so we will be recording the transaction at no gain, no loss. Fall in value relief is for IST purposes. Let's say there is a pet, an asset which is transferred in life to a person, to other person, from a person to other person. We check the value of the asset, which is value before gift. And then we consider the value after gift. And the sum of these two would be the value of asset, right? Now, so that is termed as fall in value or diminution in estate. The importance of timing. No need to consider the tax year of the disposal, which will determine the utilization of losses, availability of need to consider, because these things are decided according to the date when the asset is transferred. I can tell for previous fiscal year 23-24, the exemption amount was 6,000 for CDD purposes. But for fiscal year 24-25, now the exemption amount has now changed to 3,000. This was 6,000 for previous fiscal year. So yes, importance of timing is very much important for us, because the tax rates and allowances, all the things are to be applied accordingly, the date when the asset is transferred or sold or gifted for CDD purposes. And the same dates are important. Why? Because need to consider, dates are need to consider because the availability of the annual exemptions, the uses of nil rate bands, previous in seven-year accumulation principle, the availability of the taper relief from the transfer date to the death day, and known IST on donor's estate if survived gift after 7 years. And if the time gap of the transfer of asset and the death is more than 7 years, in that case, that asset will remain exempt from IST. There are further other points to discuss with respect to CGT and IST. There are certain exemptions which are available for both the topics. For example, wasting chattels are exempt, low value non-wasting chattels. Remember, for vases, any old paintings, vases, such things, if the DP and the cost both are less than 6,000, such non-wasting as chattels disposal is exempt from CDD. When main residence is disposed of and from the acquisition date till the disposal time, person lived in the same property. So at time of disposal, if there are any gains, those gains can be covered by PPR exemption. There is also an annual exempt amount, which is 3,000 for the fiscal year. There are also certain exemptions for IST purposes. For example, small gift exemption, for example, marriage gifts exemption, normal distribution out of income, and the annual exemption. So certain exemptions are to be bear in mind with respect to IST as well. Reliefs available in respect of business asset. Yes, there are multiple reliefs which can be considered if the transfer is in between connected person for CDD purposes. If the business asset is transferred in between the connected person, the name of relief will be gift holdover relief. And if the business asset is disposed and the new business asset is purchased, then rollover relief or the holdover relief can be considered. Thereafter, business asset disposal relief and the investor relief. There are certain reliefs which are there in this CGT. Keep remember, we are not studying the reliefs. We are just recalling the relevant reliefs which could be claimed in CGT according to the situation. And there are certain reliefs but not covered in TX. Yes, apart from the taper relief, there are also certain reliefs available in IST, but all those reliefs are not the part and parcel of TX syllabus. So I'm not going to discuss those. Another important difference with respect to, that's the last slide for tax planning thing. Properties. Important differences between individuals and companies. For individuals and companies, we are going to discuss the differences, important differences between the individuals and companies. For properties. For property income, remember, for individual, when we do calculate the property income, residential property mortgage interest is disallowed expense, and we can claim a relief at basic rate of 20% from the income tax liability. Do you guys remember this point? In calculating the property income of an individual person, if the mortgage interest of a residential property, we cannot deduct it from the property income. Rather, we can take a relief at basic rate of 20% from the income tax liability. And for individual person, under property income, if the mortgage interest of a non-residential property, commercial property, furnished holiday letting is there, so that's allowed expense, and we can deduct that amount from the property income calculation. For companies, when we talk about the property income of a company, for company, there is no difference between the residential and non-residential, and both properties interest is disallowed to be deducted from the property income. Rather, it is linked with the non-trading loan relationship. So for companies, both of these properties are irrelevant. Mortgage interest for any property is disallowed to be deducted from the property income. Rather, it is to be linked with the non-trading loan relationship rules. There are certain other differences for properties for capital gain tax purposes as well. For individual person, capital gain tax rate on the residential property is 18 or 24%, and CGT rate on the non-residential property is 10 or 20. If the property is residential property, then at time of disposal, this property can be taxed at 18 or 24% based on the person's status. And if the property is non-residential property, so this is to be considered as a normal asset disposal. And on the normal asset disposal, only the rate of 10 or 20% is applicable. Trading interest for companies is deducted from the trading income. Capital gains. Properties for capital gains for companies. Please do not forget these two headings. We are talking the properties differences for companies and individuals. As now we discuss that for CGT purposes, we discuss that for individual, there are differences for residential and non-residential. But for company, it's not relevant to check whether a property is residential or non-residential, or properties are treated the same. And for companies, capital gain tax is not applicable. For companies, capital gain corporation tax is applicable, because we have studied in the lectures that if a company disposes any asset, that's not taxable under capital gains. Rather, on the capital gains of the company, corporation tax is applicable. If company disposes any asset, any gain is taken to the corporation tax pro forma. But as far as individual person is concerned, individual person pays income tax separately and capital gains tax separately. But for companies, companies only pay corporation tax, whether it's trading profit, whether it's property income, whether it's interest income, whether it's a capital gain. Companies always pay corporation tax on all the heads. For IST purposes, IST is not applicable to company, because company never dies like human dies. And with respect to properties, inheritance tax, if the property is a residential property, then residential nil rate band is available on transferring the residential property to death time to direct descendant at death time. And in the heading of direct descendant, what persons are covered? Who are direct descendants? Can you please tell? DD stands for direct descendant. Who are direct descendants? Children and grandchildren are treated as direct descendants. And at time of death, if residential property, all of the conditions must be met. If a residential property is transferred to direct descendant at time of death, then residential inherit band can be claimed. And no RNRB is available on transferring the non-residential property even to direct descendant even at time of death. For claiming this relief, the property must be residential. Property must be transferred at time of death. Property must be transferred to direct descendant. If all three highlighted conditions are met, in that case, you can claim residential inherit band. If any of these conditions is missed out, in that case, you are not eligible to claim the residential inherit band. And for IST purposes, there is no IST for company. So this is how we are now fully done with all of the things under tax planning, and we attempted around 6 to 7 or 7 to 8 questions within this topic. And now I would request you to please open your Kaplan kit and start attempting the questions wherein you can see the requirement is asked for 10 marks. So all the 10-mark questions in your Kaplan kit, in your BPP kit, in your study hub, all those questions are pertaining to tax planning. And I'm very much hopeful that from now onwards, you can easily tackle the questions for tax planning, because we have discussed multiple scenarios and we covered all of the aspects within these lectures. I'm wishing you very good luck for attempting the tax planning questions.